Breaker block is a failed order block that can be used as support or resistance zone. Many traders find it difficult to identify the correct breaker block. Take note of this. Every breaker block is a failed order block, but every failed order block is not a breaker block. Before we get into the business, please do well to subscribe to this channel and like this video. I will divide this video into two parts. This is going to be part 1 and I will make the next one, which is going to be the part 2. For you to understand breaker block, I'm going to give you some rules to follow. So if you are a beginner or an intermediate or advanced learner, this video is for you, and make sure you watch to the end. Number 1 rule is BOS. There must be break of structure. Number 2 is that order block must be respected. Order block must have been respected. Number 3, there must be displacement. So these are the 3 rules we are going to consider in this video. This particular one is going to talk about bearish breaker block. The next video will be on bullish breaker block. Let's do some structural example. Suppose we have an uptrend making series of higher high, higher low, higher high. You have break of structure and it comes to mitigate other block and creates another higher high. After making that higher high, it comes down to take out the other block and close below it. We'll look at this zone for possible entry. As you can see from here, we have a mitigation after break of structure. Let me label these things well so that I'll be able to explain this thing the simplest way. There's a break of structure here, BOS. After this break of structure, price came back to mitigate the other block that caused the break of structure and took out this high here. There's a swing high here. Let's also label it. This is a break of structure, taking out this liquidity. And after taking out this high, price came down to take out this low, which is the other block that created the previous break of structure and close below it. In this scenario now, we can have what we call breaker block because this other block initially held and later failed. So we'll mark this as a breaker block. Why? Because it has break of structure. This price came and closed below it, and other block must have been respected. Let me make this correction. Must have been respected. Following these our rules, this other block was respected. How do we know? After break of structure, price came and mitigated it, then move up to take out this liquidity, so it held. And after that, price reversed and took out the other block, forming a breaker block here because price closed below it. So we'll be looking to sell if price comes back to mitigate the breaker block. So this is what we do now. If we have displacement here, and as you can see, this price moved aggressively. If liquidity is created and price comes back to mitigate the breaker block, we'll be selling. And if we sell, we will target this low here. So if we sell here, we'll target this low. So this is for bearish breaker block. I hope you understand this explanation. We can then move to charts. Let me show you typical example of what I've explained here. In this example, we have price making higher high, higher low, higher high, higher low. As you can see from this structure, higher high, higher low, higher high, higher low. And after creating this break of structure here, let me zoom it so that you can see it very well. That there is a break of structure here. Let's mark it out. There is a break of structure here. This is the first pullback. There is this pullback and price moved to close above it. And after price closed above it, price moved down to mitigate this other block and moved up again. And continue going up, creating higher high, higher low till it reached to this point. When it reached to this resistance level, price retraced and it came down to this side and took out this previous other block that created this high here. When it took it out, it closed below it. And now look at this and take this as breaker block because it met these our conditions here. So anytime price comes back to mitigate here, we will short this market. So this place now becomes our resistance level. It was formerly our support level, but it's now it was formerly our demand level. Now is a resistance level. So let's look at this together. You can see that there is inducement created here. So we wait for price to pull back to this breaker block, and here is it. When price got back to this breaker block, I shorted this market, and as you can see, I targeted the low here, and this is a winning trade. How do you place your stop loss? Stop loss is placed above the candle that created a breaker block. As you can see here, I've marked it out for you. You can see it. Let me zoom out or zoom in so that I can see it here clearly. And I targeted this low. So this is a valid break of structure. Remember, I told you earlier that every failed order block is not a breaker block. Just like this one now is not a breaker block, but this is a failed order block. Why? Because there is no respected order block here. You see this pullback, this order candle did not mitigate. There is no break of structure that came back and that price moved from to mitigate this other block here. So this is not a breaker block. You see series of failed other blocks that are not breaker block, but many people mark it as breaker block simply because there are failed order block. So if you have question, you can ask in the comment section and wait for the next video. Let me know if this is helpful in the comment section. See you in the part 2. Bye.